Hello, everyone, and welcome to our next session, our second to last session of the day on cross-border payments, looking at CBDCs, instant payments, and upgrading the existing infrastructure. It's my absolute pleasure to welcome four esteemed experts on the topic. Victoria Cummings, Chief Legal and Regulatory Officer at RTGS Global Limited. Tommaso Mancini-Griffo, Deputy Division Chief of Monetary and Capital Markets Department at the IMF. Harvey Siglom, Governor of the Bank of Mauritius. And James Wallace, Vice President of Central Bank Engagements at Ripple. Welcome to you all. So just want to remind those listening online, you can submit questions virtually, and we'll take some towards the end. And those here will very happily take some questions as well during the discussion. We've got some people with mics around. To kick us off, we will launch a few polls. You can vote on them on the app. The first one is, what is likely to be the greatest challenge when attempting to create a seamless cross-border transfer system? So a couple of options, different AML CFT restrictions, 24 hours a day, 365 days a year availability, messaging and standards, FX liquidity provision, and standards on CBDC. So please vote, and we'll come to it at the end. And then we have one more on interlinking domestic CBDCs. We'd love to know your thoughts on if you think this will solve all the challenges we're going to discuss today in cross-border payments in the next 10 years. So to kick us off, I would like to first turn to Governor Harvish to share his thoughts on the wider cross-border payments landscape. What do you see as the key challenges from a remittance perspective, from a retail business to business, and from a wholesale perspective, and where have you seen the most progress?
Thank you, Katie. And first of all, I'd like to thank OMFIF and the DMI for taking such a laudable initiative. I think it's very timely, especially within the central banking community. I think we are all very much working very hard on getting ourselves prepared when it comes to the future of money, how money is being called upon to change. And certainly when you talk about money, central banks will be called upon to up the game also and be prepared. So very laudable initiative, very timely initiative also. But to come back onto your specific question in terms of cross-border landscape, I think, I always say one thing, cross-border payment systems remain the heart of the financial system. And if you are to look across the world, facilitating trade financing, facilitating investments, basically, cross-border payment systems have such an important role to play, and continuously is acting as the main enabler and facilitator in this process. Therefore, it goes without saying that we need to ensure, especially at the level of central banks, we need to ensure that we do have the most appropriate infrastructure and ecosystem which comes in to support the operationalization, but more importantly, the innovation aspect when it comes to cross-border payment systems, as well as closing any loopholes and gaps that may be inviting for trouble potentially. Now, if you are to look, and here I'd like to bring the discussion more at a regional level when we talk about Africa. When we speak about Africa, you would see that there are several regional payment systems that exist across the continent, ranging from the west to the east to the south. Basically, many regional payment systems currently exist on the continent. In the case of Mauritius, at the level of the Bank of Mauritius, we are the settlement bank and the host of one of such a regional payment system. That payment system is called the COMESA, Payment and Settlement System. Now, COMESA is a regional trading bloc. It regroups 19 countries in Africa, primarily eastern side of Africa, and some of the Indian Ocean countries also. And we have been actively operating it. We have been actively playing as the host of it and settling. And today, we're very proud to say that we settle everything within one day. To tell you that it is of strategic importance to ensure that at regional levels, we do have payment systems that operate properly. Now, certainly, going forward, there are a few areas of challenge that keeps us awake and that are creating the situation for us to invest more and to allocate more resources also to ensuring that payment systems continue to deliver in a very efficient and effective manner. Challenges are many, but some of those challenges, especially when you talk about Africa, are lack of appropriate infrastructure, basically. That is a major concern for I would say for many developing and emerging markets also, but in the case of Africa, it remains one of the major challenges. Transaction cost, again, remains very high when you talk about many of those payment systems. Interoperability between the systems also is such an important thing, because today when you talk about trade financing, for example, cross-border financing in Africa, you're not only talking about such financing happening within regional blocks. It's across regional blocks. It's also going onto Pan-African level, and interoperability remains a big challenge in terms of us being able to ensure effective operation of the payment systems. We also have a daunting task to ensuring that cyber security does not come in as a threat. I mean, it is already here. We need to ensure that, we are closing all the loopholes and the gaps when it comes to cyber attacks, basically, because this is something that poses a big question mark when it comes to the good operation of payment systems across the continent. Certainly, one of the very important challenges also remain in the very ecosystem that supports payment systems across the continent. And here I would like to focus more on the regulatory frameworks. There is a need for effective payment systems to operate, basically. There is a need for a harmonization to happen at the level of regulatory regimes. Very important. We need to be able to have a minimum standard when it comes to the development and the support of that ecosystem that we're building, basically. I mean, all of this brings us to the fact that if ever we want payment systems to continue to operate in an effective manner, in an efficient manner, we would need to also collaborate extensively amongst not only central banks, but also amongst regional blocks. I'll give you a live example here. At the level of the continent in Africa, we're currently talking about the creation of a Pan-African payment system. Discussions are very advanced to that end. At the level of our Association of Central Banks, also in the continent, we've been having extensive discussion on that, and much progress has already been made. We're now at a phase where we're trying to resolve whatever issues that may be existing when it comes to linking and making interoperability much easier between the various regional payment systems that currently exist. So what we're trying to achieve, again, is to make things as smooth as possible when it comes to cross-border payments. I think that brings me back to what I stated in the very start of when you were asking me the question about the fact that payment systems remain the core and the heart of confidence and of trust, of trading to happen, basically. If we do not give the necessary effort, we do not put the necessary effort in ensuring that we have the right infrastructure, the right ecosystem, that would be quite a big challenge. And then certainly we need to continuously also ensure that we're closing all loopholes, as I said, when it comes to threats, like cyber attacks and cybersecurity threats also. The rest here, and then we can discuss further.
It's a really exciting initiatives that I think other countries can learn from, and you've set the scene really well to talk about harmonizing of standards, transaction costs. So I'd like to turn to Tommaso now How has the international community then began addressing some of Harvish's points? What progress has been made so far?
Thanks very much, Katie-Ann, and thanks to OMFIF for the very kind invitation. The international community has actually done a lot, and it's not in every area that I can stand here and say that. So it's quite exceptional what has happened. Cross-border payments at the retail level have never really worked very well. And a lot of policymakers have been saying we should do something about it. But it was hard, because it comes down to a coordination problem. You either all get together and agree to do something about it, or nobody, it's not really worth for anybody to try. And we needed a common shock. And the common shock came in part with the announcement of Facebook's Libra. I don't know if Christian Catalini is still in the room. He just spoke at the last panel. In a way, he did us a favor. So thank you, Christian, if you're still around. And I say that only half jokingly, but there was an appreciation of how urgent it now was to act, and the fact that it was now possible to implement new solutions in order to improve cross-border retail payments. So the international community got together, and under the auspices of the FSB, drew out a roadmap. The first step was to say what was wrong. The second step was to list all the possible solutions. There were 40, 50 pages worth of possible solutions. The third step was to bundle these into more or less feasible blocks. They were called building blocks. There were 19 of them. Each one was investigated. There were stock takes that were done. What is the world like relative to each building block, and what can still be done? And we've recently, when I say we, it's really the members of this large group, countries, in addition the international organizations, the IMF, the World Bank, the BIS, and other standard setters, got together and said, all right, let's prioritize these 19 building blocks into 3 buckets so that we can get results. We're committed to getting results by 2027. That's the horizon at which we want to see tangible results in terms of lower cost, faster speed, greater transparency, greater access. And the 3 areas in which we've decided to really focus are interlinking payment systems. And that includes things like increasing RTGS opening hours so they overlap. They also touch on things like linking fast payment systems. Maybe we can speak a bit more about them later. So number 1, linking payment systems. Number 2, regulatory and legal harmonization. We need similar rules across countries if we're going to be sending money and if we're going to be sending data. Remember, it's not just about sending value, it's also about sending data. The third area is data and messaging standards. You've all heard about the 20022. I'm not sure if I'm missing a 0 or not, but believe it or not, despite the fact that we have some sort of messaging standard, the implementation is rather different across countries. The implementation of FATF standards are rather different across countries. And of course, every little difference amounts to a roadblock to cross-border payments. So those are the 3 general areas in which the international community has decided to focus. And the focus will entail the development of products, the changes of legislation, regulation, the interaction with the private sector, and this is much of what we're doing today as well, and technical assistance, which the World Bank and the IMF will be delivering in the area of cross-border payments. So there are a lot of countries around the world that simply lack the capacity, not just to implement new systems, but to regulate. And we have a mandate, a very strong mandate, and a strong desire to help those countries by building capacity domestically. We do that by fielding missions in these countries, and in these missions by bringing experts from other central banks. So this is also a way to transfer knowledge around the world. So this is a little bit where we stand. I know this is a lot about process. We'll get into substance later. But this paints the general picture of where we stand now.
Thank you, Tommaso. I think really useful overview, and we'll get into some of those details in a bit. James, I always cite Ripple as a company that's solved a lot of these problems that the public sector are now starting to look at in more detail. So I'd love to hear from you, what are some of the lessons learned from RippleNet and the company at large that can address some of these problems?
Yeah, thanks, Katie-Ann, and thanks for the opportunity to join the panel here. It's been looking forward to this one. No, I think we have solved some of those problems. For those of you that don't know, Ripple, one of our main products is something called RippleNet. It's a cross-border payment system. We're operating with customers in about 55 countries, and we have payout channels into about 70 countries globally. It's evolved over time. I mean, Ripple's is about a 10-year-old company now. The use cases have evolved from remittances and then adding in to treasury payments, cross-border wholesale payments. The big breakthrough that we saw, though, is we were trying to do a better. Frankly, this is not a surprise to people. We were trying to do at the time a better version of SWIFT, right? So faster, cheaper, more transparency, instant settlement. We've sort of moved on from that, and we think the opportunities, is much broader, including obviously on the retail side, and also SWIFT doesn't operate in every country, right? So, I guess two things that we did. One was from the very start we introduced some standards. So we follow ISO 20022. That's the right number, I think. And you're absolutely right. The implementation of that does vary around the place, so it's not a consistent standard. And the other breakthrough we had was with something called on-demand liquidity. So this is where we use a native digital asset, a crypto, XRP, as a bridge currency between the sending country and the receiving country. We call it on-demand liquidity because the way the model works is it negates the need to have pre-funded Nostro accounts in the destination country. So you essentially, you take your US dollar, you convert it with our help into XRP, you then send it to Mexico, for example, and convert it to Mexican pesos, and that's all done in a matter of seconds, right? And it's very low cost, very transparent. I really love the work the FSB has done, and I think, where I'm at now, where we're at now is we think we have solved a lot of these problems, but we'd love to collaborate, right, and work together collectively. We don't see ourselves as a disruptor. We see ourselves as building new capabilities that we really think the value is when you bring that mainstream. We have this vision of what we call the Internet of Value, which is really to look at all forms of movement of value and try and make those as efficient and fast as possible. So the analogy we use is it's like sending an email, right, or some information across the internet is very simple now. A payment is less simple. So that's I think what I would say on that. We'd love to get into more of the discussion, but we do have a lot of beneficiaries of what we've built, and if anyone in the room wants to learn more about it, we'd love to chat.
And I like the Internet of Value. I think people want instantaneous payments like they want messages or texts, and something that we should all look towards. Victoria, you also work very closely on upgrading the correspondent banking network, and you're doing lots of interesting work on the wholesale side. So from your perspective, what's the crux that really needs addressing, and how are you guys addressing it?
Yeah, thank you, Katie-Ann, for the opportunity to participate on the panel today as well. It's a pleasure to be here. I've worked in cross-border payments in FX and FX settlements for about a decade now, so always thrilled to participate in a panel on cross-border payments. And, I think just echoing the point that Tommaso made about the FSB roadmap and the building blocks. I'm very excited to be working for a company that's innovating in the cross-border payment space, because there is that imperative that has been given by the G20 and the FSB to look at this and to do it better. So RTGS Global is a startup company. We have built a new system for banks to exchange currencies and settle those currencies on a PVP basis efficiently, safely. So we're really kind of working in an area that is the heart of innovation right now, which I think is fantastic, and we would obviously like to launch our service to provide some alternative mechanisms for banks to PVP settle their trades, given how important PVP settlement is and mitigation of settlement risk is for FX transactions. Just coming back to the G20 roadmap, the 19 building blocks, you know, from my perspective and based on what we're doing at RTGS Global, I would say building block 9 is probably the most relevant to us, which is the CPMI's call for expanded use of PVP settlement. A lot of FX is settled on a PVP basis today, which mitigates the settlement risk or the principal risk or the Herstat risk, but there is still a couple of trillion of turnover of FX that has been identified by the BIS as still subject to that settlement risk for various reasons. I think for us then, you know, addressing some of the roadblocks to expanded use of PVP settlement is where we want to help tackle some of the challenges. You know, is it because two banks that are settling an FX transaction have access to PVP settlement with an incumbent, but it's not the type of settlement that fits their purpose or the use case they have, or what money they need, when, and where? Is it because the existing capabilities are too expensive? Is it because there's some other regulatory barrier? Maybe they're not a member of a PVP system, not eligible. So really, we want to try to provide a system that is more inclusive, both from a currency perspective and a participant perspective, to really address that 2.2 trillion gap that exists in mitigating settlement risk, and, you know, contribute to enhanced cross-border payments in that way, which, you know, with risk comes cost. So hopefully reduction of risk will reduce costs for banks as well, and the cost that they have to bear when they're settling a transaction that is not on a PVP basis or in a way that protects against settlement risk. So yeah, definitely keen to unpack a little bit more perhaps the different building blocks, but that would be our primary focus, I would say.
And can I just a quick follow-up? Why has FX settlement risk risen so much in recent years?
Well, there's a number of reasons cited by the BIS, which is that you've got more trading in currencies that are not one of the CLS bank currencies. I used to work at CLS Bank, so I'm quite familiar with their workings. They are the incumbent PVP FX settlement system in the industry. They settle 18 currencies, but they don't settle there's obviously more than 18 currencies in the world. They don't settle everything, and with an increase in trading of these other currencies in some emerging markets, for example, that means that there aren't PVP capabilities necessarily. You know, some of the other reasons for the risk rising might be that, you know, there are other needs that banks have if they need to settle immediately after their FX trade, do a same-day PVP settlement. The capabilities might not accommodate that. The whole world is moving right to faster, to instant everything. But I don't know, maybe the other panelists also have some thoughts on why why principal risk is rising.
James?
I really liked your answer. That's good.
Well, I was just repeating what the BIS report found from December 2022. So if anyone's interested in learning more about why that risk might be increasing, I mean, you know, turnover in FX in general is increasing. There's more trading, hence there's more trades to be settled, hence there's more.
It's really, I always think it's really useful to go over it, and especially so loads of these issues have disproportionate effect on emerging markets. So I think it's important to discuss that angle. So let's move on to the elephant in the room, which is CBDCs. Now, the ECB itself has said that they think interlinking CBDCs cross-border is the holy grail for cross-border payments. So, Harvish, I want to turn to you first. How are central banks looking, and how are you looking at CBDCs in the context of cross-border payments?
I think the question is a very deep one, in the sense that we need to first of all understand why central banks are embarking on CBDC projects. And for that, you'll need to go back a few years, basically a couple of years. I think Tommaso did rightly put into context what was happening with Libra a few years ago. But going beyond just that, there was, in around beginning 2020, a major risk that we saw at the level of central banks when it came to monetary sovereignty. And as central banks, we had to ensure that monetary sovereignty remains basically within the control of central banks, or else it could have been quite, a journey walking into disturbing, monetary systems around the world. But again, each country that has been rolling out a CBDC has been doing it at the level of the central banks for various different reasons. A few have been working towards achieving more financial inclusion, while a few are doing it just for the sake of certainly ensuring that you are continuously innovating. Others are looking at really filling the gaps when it comes to cross-border payment challenges. And the list goes on like this. In the case of Mauritius, we have been also working very closely on rolling out our CBDC, the digital rupee. And the decision was taken in 2020, again, as many of the central banks did, took their decision for CBDCs back in that particular year. But we preferred to adopt a very cautious and prudent approach to working on our CBDC. I think you have a number of live cases today where there have been a few cases of CBDCs which have been rolled out, but then they've had to face quite a number of challenges and are being relooked at. And this is something that we need to avoid at all costs. As central banks and monetary authorities, we are trusted by our citizens to ensure that there is an effective, efficient, and trustworthy monetary system that we are safeguarding and operating. If we get this marvelous journey that we have embarked on in terms of achieving and creating CBDCs, if we get anything wrong, it affects directly confidence into the system. Yeah. And this is what we need to avoid at all costs. Because at the end of the day, we're talking about a CBDC that needs to be accepted and adopted also, be it by citizens of a particular country, if you are to take it at a cross-border level, by citizens and traders and investors and the business community of other countries also. And if you do not have confidence into it, adoption and acceptance will not be there. And this is where many cases are actually struggling to be able to progress. So again, coming back to what we're doing in Mauritius, we decided to adopt rather the cautious and prudent approach. We were the first country in the world to have benefited from technical assistance of the IMF when it came to the rollout of our CBDC. And we've progressed extensively over the last 2 years. In Mauritius, we're working more on a retail model as phase one, I must say, and phase two will bring in the cross-border, but it's being done in parallel. But phase one is what I'll be launching the pilot. We've already made public announcement on that also, but we're launching our pilot towards the end of this year. And at the same time, we're working on our cross-border model. But whatever we've been doing, it has been done in such a way that, you know, we understood what the requirements were, what would be important for banks in Mauritius, for example, to be able to accompany us in this process. Because one thing that we're putting a lot of focus on in Mauritius is to ensure that we have a hybrid model whereby we are not disintermediating banks from the system. It is very important to continue to have banks within the system. Yeah. So it's a hybrid model that we've rolled out. We've also taken the decision on the monetary policy side of things in the sense that the CBDC in the initial phases will certainly be non-interest bearing. A big question mark that there has been over the last couple of years, I would say, amongst all monetary authorities, in terms of whether to make CBDCs interest-bearing or not, basically. So the decision has been taken in Mauritius for that end, and I think most of the CBDCs that have been rolled out today across the world or are in pilot phases already are adopting the same approach also. So we continue to work very closely with IMF. We have now completed a number of our feasibility studies. We are now in a sandboxing stage where we are testing a number of parameters, and then we will be working on the design and certainly the rollout of our pilot towards the end of the year. But then again comes, that's on the retail side, then again comes the cross-border side of CBDCs. Again, here I personally see a major role that CBDCs can play in plugging in the gaps that currently exist with our conventional system when it comes to cross-border payments. It can bring down costs. The challenges that I was referring to when I was speaking earlier on, it would help to quite an extent in addressing those challenges, certainly. But again, the major challenge that we will need to work on here is ensuring that on the AML CFT front, we're not opening doors for transactions that would be going out of control. And this is where it is very important for us to stay focused and, again, to collaborate and coordinate in such a manner that we are not leaving any windows open for any ill-intentioned person to come in and actually abuse the system that we're trying to put in place. And this is particularly true for the emerging and developing world primarily. Today, when you look at how the FATF has been working over the last few years, they have been putting a lot of focus, basically, on this side of the developments also. In the case of Mauritius, again, we happened to be on the grey list of the FATF back in 2020, and we exited the grey list in record-breaking time within 16 months. I was chairing the entire discussions with the FATF, and I must tell you that, you know, this is an area where we've invested extensively. Other countries around the world are, again, going through this process right now, and I would urge basically everyone not to ignore these because, again, the minor oversight that we may have may lead to much more complex issues and problems for us going forward. So while CBDCs are here certainly to complement the existing system and to bring in a way, much more options on the table when it comes to further smoothing the entire cross-border payment landscape, it is important that we do not lose sight of the risk that currently exists.
That's an excellent point. It's not going to fix everything. Tommaso, what are your thoughts on how these multi-currency CBDC projects are progressing, and what do they solve for that Harvish hasn't already mentioned?
Okay, so the first thing to mention is, I think, a point that maybe I can expand a little bit on one of the points. And you were saying it's not just about technology, it's also about managing the risks, and it's also about being aware of the policy implications and the implications for capital flows, the implications for countries to be able to manage those flows, the implications for countries to be able to continue intervening in the foreign exchange markets, for instance, and which market. Also, the fragmentation of the international payment system. Are these new initiatives going to create some wonderfully efficient links between a little group of countries and another little group here, but very few links in between, or not? What sort of international payment system are we going to get? What sort of international payment system do we want? And these are some really, really important policy questions that we need to be aware of while we speak about technology, while we speak about implementation. We shouldn't lose track of the North Star, which is really the big macro implications. So you asked me a little bit about cross-border payments and CBDCs. CBDCs seem to be wonderful things. We can send these tokens to each other, right, peer-to-peer, and that's great. And we can kind of immediately think or imagine that can be done cross-borders, and wouldn't that solve all the problems? And it turns out that it's, of course, a lot more difficult than that. If I were to send my CBDC in my country to Kirian, who lives in another country, will she trust my central bank? Will my central bank trust Kirian, despite her nice smile? Has she been KYC'd by the same standards that my wallet holders have? So there's a question of trust. There's also a question of practicality. What is Kirian going to do with my CBDC in her country? Is she going to be able to walk down the street and buy groceries with it? Probably not. Not just because it may not be compatible with the merchant systems, but also because the merchant doesn't want the funny currency that my central bank issues. It wants its domestic currency. So this peer-to-peer transfer, which seems wonderful, really, when you think about it initially, it comes up with all sorts of complications. So what will Kirian do if she were to receive my CBDC? Well, she would go to a market and try to exchange it. As soon as you start to speak about the market, things get a lot more complicated. Who are going to be the counterparties on this market? Who is going to be offering the exchange, the domestic CBDC, on what terms, et cetera, et cetera. So despite this model of peer-to-peer direct exchange being technically possible, we're kind of immediately thrown back into the more complex world of markets, where the distinction between retail and wholesale starts to blur a little bit. And we got a taste of that earlier with the discussion on the Icebreaker project. And there is a class of solutions that really have to do with clearing systems, clearing platforms. And I think that's what Icebreaker is, and I'm pretty sure that's what Nexus is, which is another project that links fast payment systems. And the way to think about these clearing platforms is really just an orchestrator. Somebody who says, all right, you want to do a trade? Okay, here's the checklist of all the things you need in this side of the world and on this side of the world. Make sure you have everything. Is everybody ready? Yes, okay, we can go. Let's go. And at this point, there's a PVP, a payment versus payment that is done, knowing that all the requirements have been met, and then everything goes through. But the settlement still happens on the books of intermediaries that are in between, the correspondent banks in this case. And that's fine. Getting all of this lined up, having the orchestrator help, having a clearing platform in the middle, certainly decreases costs. But the question is, can we go further by moving settlement on a platform? So what do I mean by that? So on the platform would actually settle the transaction, would actually send an asset over to Kirian. It doesn't have to be a new asset. It can very well be an existing asset, as we said earlier, I think, in the discussion. It could very well be the good old dollar, the good old euro, or the sterling, or whatever other currency two parties wish to exchange. And that is starting to be possible with this new class of platforms that are so-called the settlement platforms. So if you allow me another 2 minutes just to illustrate. So what happens now in the correspondent banking world? My client, I'm a bank, and so is Katie Ann. I have customers, so does Katie Ann. My customer wants to pay a customer of Katie Ann, who lives, of course, in a different country. So in the correspondent banking world, we get together, and I, the bank in this country, call Katie Ann. Katie Ann, can you please credit the account of your customer? And Katie Ann says, no way, because what am I going to hold as an asset in exchange? And I'll say, well, don't worry, can you lend me some money? And that's basically what happens in a correspondent banking relationship. There is a bilateral credit relationship that is established between two big banks that trust each other, that know each other. There are not a lot in the world that are willing to play this game by nature. And as a result, Katie Ann will credit her customer's account. Now, what if, instead of that, I could tell Katie Ann, you know what, here's a tokenized version of my central bank's reserves. Here is a tokenized whatever, euro, dollar, whatever currency I live in. She can hold that as an asset and then credit her customer's account. And if she holds that as an asset, it's perhaps a bit more secure in terms of a claim than just a bilateral claim on me. And it's also more liquid. She can get rid of it. She can sell it to somebody else on the same platform. So now you're starting to see the advantages of a settlement platform where we have an asset here that we're sending each other and that Katie Ann can continue to transact. That asset can be a tokenized version of my country's central bank reserves. It can be a tokenized version, perhaps, of a commercial bank deposit, such as we heard earlier from JP Morgan. So what I'm trying to do is suggest different models here of platforms, but also try to link these back to the conversations we've had until now, where we've looked at commercial banks tokenizing their deposits, and we've thought a little bit, of course, about central banks tokenizing their deposits, which is also called wholesale CBDC. So this is an illustration of what wholesale CBDC might be used for.
Thank you. No, that's really useful, and I think it's almost better to use your words than wholesale CBDC, because we already have wholesale CBDC, basically. James, Victoria?
I was just going to jump in to add, I mean, this is exactly the type of platform that we have built at RTGS Global. We're not built specifically for CBDCs or for tokenized assets. We're built for non-digital fiat, if you would have it, using a more traditional model of accounts at central banks today. However, you know, RTGS Global, we're built for now, designing for the future. I think we would want to make sure that in what we are developing, we keep an eye on what's happening in the CBDC world, such that we could incorporate CBDC potentially as a settlement asset on our platform. And just to go back to the building blocks, of course, building block 17 from the FSB roadmap is focused on multilateral platforms for cross-border payments. So hence innovation like ours that's looking to provide these sorts of capabilities, because as you say, you know, does Katie Ann really want your currency? Does she want your CBDC? Likely, she will need to have her own currency CBDC to pay for things in her country. So that FX element that sort of sits behind what we see, oh, it's so easy to buy things around the world, you know, behind the scenes of that, banks are exchanging trillions of dollars in FX settlements and handling all of that FX for us in the background. And you know, it's vitally important that they have a place where they can effect those FX settlements safely, with reasonable cost, and of course, mitigating the principal risk so that there's not the risk that they will pay one side but not receive the other side.
James, I mean, we've heard from Victoria, they've already got this settlement system. We've heard from Tommaso that we could create these new platforms. What do you see as the future of interoperability between CBDC systems and current systems?
Okay, how long have I got?
2 minutes.
I'd like an extra 2 minutes on top. Just kidding. Yeah, so firstly, I think, if we talk about CBDCs, there are different motivations. Different countries have different motivations, right? Some it's around, improving payments efficiency. Some it's around financial inclusion. Some it's around cross-border payments. I mean, there's a very long list, and different motivations in different countries. I think, the way that we look at it is the sort of three basic primitives, right? Three basic sort of building blocks for CBDC. There's, basic wholesale for interbank settlement, basic retail for as an alternative to cash, and then cross-border. And we added cross-border about 9 months ago because every single central bank that we're working with talks with us about cross-border. Not specific to our RippleNet business I mentioned earlier, but specific to CBDC, right? And so what does CBDC bring to the table, right? And when you start thinking about the cross-border side, the word interoperability keeps popping up, right? And there's a few different definitions on interoperability, so just bear with me on that a second. So, one level of interoperability is just being able to use a domestic CBDC domestically. You want to go and buy coffee or go and buy a chicken or whatever, right? The second one is there's a technical level of interoperability, right? So, every country will not use the same core ledger technology. The countries that choose DLT are probably going to pick, a few different flavors. So how do you do that, exchange between those on a technical level, right? And it comes to the point, are you going to be able to receive CBDC for Tommaso's country, or is there going to be some intermediary in the middle that does that conversion? I think most likely for the foreseeable future, there'll be some intermediary. There may even be different sort of in quotes, neutral assets used. It could be stable coins or crypto or some kind of bilateral agreement, one CBDC to another. So it may not always need the same intermediary model. So I think that's, the ultimate goal here is, that we have a very efficient way of exchanging value. And why is that important? That's because that's what trade is based upon, right? You need that to be able to trade, and the more efficiently you can trade, if you get paid faster, you get paid 100% of what you're owed, not some haircuts along the way or fees. That's good for the economy of the receiving country. It's good for the companies or the individuals that are working in those countries as well. So that's really, I think, our perspective. It's a bit complicated, right? There's not a simple magic answer. And I don't think there's going to be, the end game is a long way off because if you think about it, to get everyone being able to transact cross-border in this very efficient way, that requires everyone to be at a certain level of development. Yep. So I foresee that for at least the next 5 years, maybe the next 10 years, you're going to have countries that have a CBDC trading with countries that don't have a CBDC. So then you have to accommodate fiat to CBDC. You're going to have various, tokenized deposits and stable coins in the mix. I think they will all coexist. So you can't just plan for the utopia, right? You have to figure out how do you get there in these steps along the way. And that requires a lot of collaboration.
Definitely. And in terms of everyone being at different levels and different stages, can we look at CBDC for cross-border in isolation to domestic?
You can, but I think you'd be missing an opportunity if you didn't include. I think best practice is to think about CBDC holistically. Think about domestic benefits. Think about cross-border benefits when it comes to trade or remittances. It's a simple, short answer. I think you should look at both.
Totally agree with you, James. I think you can, but you would be silly too. I'm really encouraged hearing the central banks say that in their thinking and development around retail CBDC, they're keeping cross-border in mind. Because honestly, my perspective is actually that the cross-border, of course, is harder to solve for, but to me, it's really the cross-border that is the potential exciting and innovative use case here more than retail. Sure, retail, I go from cash, now I have a digital wallet directly with the Fed, let's say. But you know, we have very, very good ways of instantly transferring the same currency from A to B. To me, it's not such a giant leap to go to a retail CBDC, although of course acknowledging the multitude of policy factors that have to be borne into account and how careful you have to be before deploying something like that. But really, I mean, where is the difficulty? I mean, it's easy for me to transfer local currency. It's actually very easy for me to buy things from overseas using my credit card where you know, it's instant. Sure, I'm sure I probably get charged some exorbitant amount to do that, but it's fairly straightforward. You can do it as long as your recipient is on a card network, right? But where is the really tricky part? Someone mentioned it on a panel earlier today. It's when I want to send $100 to my brother in Thailand for his birthday. He doesn't, you know, I suppose I could just give him my credit card number and say, go off and buy yourself a present. But if I want to get some cash to him in Thai baht, and I'm just using Thailand as an example because that's where he lives, you know, I have to go into the bank. I have to say I want to initiate. What's his account number? How much do I want to send? Okay, what's a big fee? It'll take 3 days to get there, and I'm sure my FX rate is awful. So I think potentially CBDC for easy and more reasonably priced cross-border payments is really where there's a need and where there's potentially the most interesting use case coming out of all of this.
Definitely.
Maybe on just to build on that. Again, I think what we need to understand when it comes to retail CBDC is what is it that we're trying to achieve. You know, I mean, there's no point just introducing a CBDC for retail purposes for the sake of introducing it. Today, if you look at, we were talking about payment systems earlier. If you look at how payment systems are effective in many parts of the world, I mean, that poses a big question mark on the very essence of having a retail CBDC. I mean, what will the retail CBDC come and achieve here? So we need to first of all understand really what is the end use of putting something up. And this is where, you know, I think we have to bring down the debate again more focused when it comes to retail. I think we're more talking about low-value transactions and about programmable CBDCs here, because this is what we are really targeting. And then certainly the cross-border aspect is even more exciting, you know, and this is where we can really resolve many more issues and have many more use cases. But bottom line again in this entire problematic and that we're trying to resolve, you know, at the level of central banks, I think the most important mantra remains collaboration and exchange of information, because we're still at the very early stages. I mean, we're talking about a journey we've embarked on since 2020, as I said. I mean, so we're only hardly 3 years down into it. We are putting increasing efforts, yes. But the only way in which we can actually try and make this successful, if at all, is by collaborating. There would be a number of accidents, certainly, as we go along, but doesn't mean that, you know, we cannot preempt those accidents and then try and resolve it before it happens.
Yeah.
And ultimately, it is about confidence into whatever we're doing. You know, if there is no confidence, if we fail to achieve confidence, there would not be acceptance. And if you do not have acceptance, I mean, there's no point. You know, I mean, it will not serve any purpose.
I have heard an interesting opposing argument to that, which was that they're not actually too worried about adoption because they just want a CBDC out because it's a moral obligation. So I think
no, not really, because today, if you look at so many countries have actually rolled out CBDCs, you just need to look at case by case, what is the issue that they've been facing. You know, I think the broader intention earlier on, when many monetary authorities were thinking about it, was like, look, we are a monetary authority, we will roll it out, people will use it. but it is not the case necessarily. You know, I mean, so if we are not able to gather the confidence of the public into it, the confidence of the end users into it, it serves no purpose. So this is where we have to be worried about adoption, and we have to be worried about acceptance.
And it's also a waste of money. Oh, yes. Tommaso, and I'm going to get told off for this, but I would like to take a few audience questions if there are a couple. But Tommaso, please raise your hand if you have a question, or if you don't, then that's fine. Okay, perfect. Tommaso, the floor is yours.
I don't want to stand in the way of the questions, but I would like to stimulate the argument. I don't completely agree with what both of you just said.
Good.
In terms of we can't dissociate retail, we can't dissociate domestic from cross-border CBDC, in the sense that we necessarily have to think about the extension of domestic CBDC to cross-border use. We have to be very careful, we have to be very clear about what models do you want for cross-border payments. Is it about the direct model where my CBDC, which is used domestically to buy goods and services, can also be sent abroad? Is that really the model that we have in mind? Because there are other models that are possible. And the models that I was just discussing earlier, these types of settlement platforms, don't require CBDC to be issued domestically. It's just a matter of being able to escrow central bank reserves and create a token representation of that on the platform in order to be able to exchange these very safe means of payment across banks, across countries. So there's not necessarily the need to have a domestic CBDC, nor would there be the need, if there were one, for that CBDC to be designed to be held in large amounts by foreigners. So we need to be very careful about what model we want, what model we have in mind before we, when we design this. And I would be a little careful not to jump too quickly to these conclusions.
I think you agreed with us, right? Because we said that, you could do one or the other, but it's desirable to do both. So that's probably a good compromise.
I mean, whether a domestic CBDC is able to be held by somebody in a foreign country, I think is one of the key decisions that need to be made by a local central bank. Do you limit it just to your local residents, or do you invite others in other countries to have a CBDC wallet in every currency in the world? So it's easy for them when they travel. They essentially have access to immediate cash. Or do you limit it to your local citizens? In which case, or maybe a foreigner, a tourist coming can get some temporary CBDC. I think that model has been deployed before, to have temporary CBDC. Yeah, very interesting, and I think important decision to be made by central banks, and then that has knock-on impacts to then, do you need an FX component if you're sending CBDC from one country to another, or can you really send your local CBDC to someone in a foreign currency and they have as much right to own it as you do?
May I? Yeah. No, I think that just illustrates that the design choices and the policy choices are really fundamental here, because that has huge implications on what you can do, when you can do it. I think there's sort of three success criteria that I think are really super important here when we think about whether it be domestic CBDCs or cross-border. One is that, which is the policy and the design. It's not going to be the same everywhere. So how do these different designs interact? So that's number one. Number two is obviously the technology, which there are some important decisions to be made on the technology front. But the third one that I think is really ultimately the most important is, will people use it, right? So back to the adoption question, KTN, right? You have to have use cases where there's some value to the user. So you can send something to your brother, right? Or you can link to a DeFi protocol and release capital from your digitized house, right? There's all sorts of different use cases. But at the end of the day, it has to be usable, right? And I think the really exciting thing for me here is this, the collaboration between public and private sector. I think, as I mentioned, those three primitives, I think the interesting use cases are going to be built mostly by the private sector on top of that, right? And they will, they're commercial organizations, and they will only work on those use cases and introduce them if they think there's a demand for them, right? And if there's a demand for them, then people will use it, and then the people supplying that use case will make money.
That's a really good point. I'm being told to wrap up, but I think we could do another hour of this conversation. If we can, I'd like to quickly look at the poll results and get the panel's thoughts. So it looks like everyone feels that coordinating on CBDC standards is the biggest challenge that we have. Would you agree with this?
For me, yeah.
Yeah.
It's clear. And without a clearly defined, harmonized, and collaborative approach, we will not be able to, again, achieve what we want to achieve. Yeah, I think it reflects our thinking. It reflects the research work that has been undertaken so far also. Yeah.
And it also implies quite a lot of faith in CBDCs, I think. Yeah. Tommaso, anything?
I bow to the person who has the knowledge from the field.
Okay. Anything to add?
I would agree. I think anytime you're looking to deploy something that potentially has cross-border implications, yeah, or involves a number of central banks getting together to agree, is going to be challenging, is going to be work. Yeah.
It's so nice that the whole panel agreed on one thing at the end there.
Yes. And then quickly, Maya, if we could have a look at the next one. Will interlinking domestic CBDCs solve key challenges in the next 10 years? 65% said yes. So we have a very optimistic audience. Well, thank you so much for my excellent panel. And please do stay. We have Caroline Wilkins from the Bank of England for our final session of the day. Thank you so much, and do join me in a round of applause.